going to do question 1 from the 2011 May-June exam paper. Okay, so from the previous video we have done question 1.2. Today we are doing question 1.1, and I've told you why we do it that way. It is the best way, and also you get most marks even if you don't have time to finish off this question. Okay, so just to recap on the question, question 1. Okay, it says that the following information was obtained from the accounting records of T Super and B Main Trading and Super Main Traders. Okay, so this is the list of balances. Number 2 is additional information. Okay, and then this is question 1 continued, still additional information, and then what's required. We have already done question 1.2, and now today we're doing question 1.1. Okay, as you can see, you get 17 marks here. It's a lot of marks. So one thing that you do when you answer your question paper, always start with the questions with the most marks, so that if you don't finish, you will still have taken, you will have a good chance of getting most marks. Okay, so today we're doing question 1.1. Let's go back. So the first thing you do here, the best method to go about this question is to start with the additional information. Now, what is additional information? Because normally we get a trial balance, right, or a list of balances, and this is where all the information we need we will find. But sometimes what happens is they forget to record things. Okay, they don't record them on time. And another important thing is our year of interest. It's very important that we know that we're dealing with balances at 28 Feb 2011. So when they forget to put in things, then they put them later and they put them as additional balances. So the first thing we have to do is to take the information from the additional balances and adjust it back to the trial balance, so that when we have the trial balance that's accurate that way, because then they could have mentioned things in the trial balance and they would have changed, as you can look at when you take a look at the additional information. So the best place to start is here by the additional information. Once you have balanced everything from the additional information, then you go back to the trial balances, then you just plug in the values into your layouts. It is super easy that way. Okay, so number 1 is land and buildings. Okay, so we know we have already done that in the previous video. It's part of question 1.2. 2.2 is the same. We have taken care of that. 2.3 still we have taken care of that. So now we're moving down to question 2.4. Inventories consist of merchandise 830 and stationery 5006. Okay, I just need to get the total for that. Let me just grab my calculator. It's 830,000 plus 5006. So that gives me 835,600. Right? That's how much I get there. So we need to go to the layout. So the other important thing is you should know the layouts. Okay, know the layout of your financial position, your statement of financial position. Okay, I cannot help you with that. You need to memorize it. And what I'm just going to do, I'm just going to plug in values. You will see it is super simple that way. Okay, so know the layout, memorize the layouts. Okay, I'm also going to send you blank layouts. So the first thing you do, you take a layout, okay, and you do the question with the layout. You just plug in values into the layout, and then once you're comfortable with doing that, then you can take the layout away, do your own layout, and then you plug in values. You will see it is super easy when you do it that way. Okay, so now we spoke about where we did inventories, right? So the total for inventories was total for inventories was 836,600, right? That's what we have found. It's 836,600. Wonderful. Okay, let's go back to our list of balances. Okay, we are done with that. Let's go to the second page of that. Now we go to 2.5. Okay. Now there's a long-term loan that was acquired on the 1st of May 2009 from US Bank, right? And bears interest at a rate of 12% per annum. The loan is secured by first mortgage over land and is repayable in 5 equal installments as from 1st Jan 2012. Now, like I said earlier, our year of interest is 28 Feb 2011. Right? Now we need to pay the first installment in 1st Jan 2012, so that means it's 11 months from here. Right? It's 11 months from here. So why do we need to know that? There's a reason why we need to know that. The reason why we need to know that is that the keyword here that we need to be aware of, okay, it's what? It's long-term loan. Okay, so when something is long-term loan, that means, you know, it's something you are going to pay for. Okay, it's gonna take more than 12 months before there's a need for you to pay for that thing. But if you have to pay for it within 12 months, then it becomes a short-term loan. Makes sense? Anything that's more than 12 months before you have to pay for it, it's a long-term loan. Anything that's less than 12 months, it's a short-term loan. So we see that the portion of the loan that the partnership took will become short-term loan after the 28th of Feb, because it's 11 months from here to there. Right? That's 11 months. Right? So since it's 11 months, that means that portion becomes a short-term loan. It's no more a long-term loan. So we need to separate it. Okay. So the partnership took let's see, from US Bank. This, you see, it's a long-term loan. So the partnership took 660,000, right, as a long-term loan. Okay, they took 660,000 as a long-term loan. 660,000. But what we learn there is that a portion of it becomes short-term. But which portion? Because we know that they need to pay a certain portion in 5 equal installments. Okay, so now we need to capture the first installment, because it's the one that is due from the recent one. So if you divide that by 5, it will give you 5 equal installments, 1 installment. Okay, so you will say 660,000 divided by 5, it gives me 132,000. So that is what is due currently. That is what is due currently. They need to pay 132,000. Okay, so it's 5 equal installment and 1 installment, so that's why you divided by 5, so you can get 1 installment that they have to pay within the current the current financial year. And then you say 660 minus 132. Then for the long term, you will get 660 minus 132. That means they have to pay 528. This is the long-term portion of it. It is 528, and then the short-term portion of it is 132. 660 divided by 5 is 5 equal installments. So you take 1 installment, which is 132. That's the one that needs to be paid for within the next 11 months. So that becomes the current loan. This is the long-term loan, right? Long-term this is long term. And then we know that the 132 is a short term. Okay, straightforward, right? So I hope that makes sense. Okay, so let's plug that into our layout under liabilities. So we sitting here with long-term liabilities, so we know that for the long term we're paying 5 to 80. Okay, so it's very important that you always reference your work. Okay, there's many ways you can do this, but for the sake of making sense, I will do it here. So we know that it's 660 divided by 5. Okay, and now that gives you 528, and then that's your long-term loan. So now the other portion comes into your current portion of the borrowing, and we know that was 660 divided by 5. That equals to 132, right? That equals to 132. That equals to 132. That is the current portion of the long-term loan. Okay, that works out nicely. And then the next part is 2.6. Amount of 10,000 must be transferred to the asset replacement reserve. Okay, so for us to be able to properly do that, we need to first calculate the comprehensive income. Then once we have the comprehensive income, normally the money is shared among the partners, right? Then part of that money will be paid back into the asset replacement reserve. So that's the money that the partnership puts away for emergencies or to grow the business or anything else. So they will put that money aside from the income that they have received after paying all their expenses. Normally when the income comes, the partners will share according to their profit sharing ratios, but then they can also say, part of the money, let's put it away for a reserve. Okay, so what we need to do here, we need to calculate the comprehensive income. So you also need to memorize the layout for the comprehensive income. Okay, so for this example, I have already set up the layout. You need to memorize the layout and what makes up a statement of comprehensive income. Okay, so the thing that we need now is to set up the current accounts. Okay, so current accounts, it's very important that you understand what current accounts are and why do we deal with them. When we deal with partnerships, all the transactions of the partners, they are taken care of in the current accounts. Okay, when the partner draws money, you balance it off on the current accounts. When the partner pay more capital into the partnership, that is all taken care of in the current account. So the partner's individual, when the partner receives a salary, you don't pay it off as a salary, but rather you balance it off from the current accounts. Okay, so it's very important that you understand the current accounts. So the first thing we need to balance the current account balances at the beginning of the year, before the 12 months before our year of interest, which is the 28th of February 2011. Okay, so when you go to our trial balance, okay, we need to find the current accounts. You can see there that T super, here's a debit, that means it's a negative. Okay, a debit is a negative. So T super here is a negative 9,750. Okay, it's a debit account, that means in his current account it was a negative. Okay, so let's go to our layout. So T super, 9,750. Okay, and then we look at B-man. B-man, it's a credit, it's a positive balance, it's 4,340. 4,340. 4,340. Okay, and then the drawings from the individual partners. Drawings T Super, it's 10,000. As you know, drawings are expenses, so it will be 10,000. And then drawings B-man, 7,630. 7,630. Okay, now we need to calculate the comprehensive income. Okay, so we need the comprehensive income for the year before. That was 574,420. 574,420, right? But it's important that you've seen that we said before depreciation, so we need to subtract the depreciation. So that's what we calculated in the previous question, as you can remember. So please remember that we're doing the comprehensive income for the current year. Okay, so this is for the current year. That's that one there. It's not for the end of the year, but it's for the current year. Okay, so that is 57,860. Okay, so we subtract that 57,60, and then we also subtract the asset replacement reserve, the money that the partners agree that they will put it aside as a reserve, and they will not share the money among themselves. Okay, so now the next thing we need to know is how do we share the money among the partners, their profit sharing ratio. So normally it was not explicitly mentioned how they share the money. If it is not explicitly mentioned, you look at their capital contributions. If they contribute equal amounts, they will share equal amounts. Okay, so you can see they contributed both equal amounts. So we will divide by 2, so they both get equal share because they've contributed equally. And then we need to calculate that. So it's going to be let me do this here. It's going to be 574,420 minus 57,860 minus 10,000, getting 506,560 divided by 2. Okay, divided by 2 equals to 253,280. 253,280. Okay, so the reason I'm putting this here is that it's important that you show all your steps, because then if you made a mistake here, an examiner can see that this value was wrong, but then they can see that beyond that you did everything right and you get marks for that. Okay, so always show your steps. When you just move from here to there, you know, they will not see that you got where did you go wrong, and sometimes it could be frustrating, and you might lose marks because of that, because they have to put so much effort to find your mistake. So make it easy for the examiner to see your steps, and if you made any mistakes, they can see where did you make. Maybe you forgot a 0 and you put it as 9. It's easy for them to see that. Okay, alright. So now we need to calculate the totals. Okay, it's going to be negative 9,050 minus 10,000 plus 253,280. You're getting 233,530. Okay, then for B-man it's 4340 minus 7 630 plus 253 280. Okay, you're getting 24990. Okay, 24990. Okay, so now this is the current accounts for the current year for the partners. Okay, wonderful. This is what the partners will have individually. So under current accounts, we will put so another thing you can see, I put a 1 there, and I will put a 1 here. That's how I will reference, so the examiner could know, how did I get this value, where did I get these values from. So it's 233,530. Okay, so 233,530 plus 233,530 plus 24990. 24990. 233,530 plus 24990. Okay, so we can put the total there. Okay, yeah, can put the total there. Which is, let's do that, is 233,530 plus 24990. Okay, it gives me 483,520. Okay, super easy. So when we go back to our list of balances, the last part is we have to do the comprehensive income for the year. We have already done that, and we have already distributed the money between the partners according to their profit sharing ratio. So now we are done with the list of balances. Now what we can do for now, we can just move to our layout, and then we just plug values in. So for example, asset replacement reserve is 30,000, right? So we go to we know that it's an asset, right? We know that that's an asset. So no, sorry, it's an equity. So we know that it will be 10,000 from the one for this year, and then the one for the, what year was it? The one for in how much for the last financial year. It will be 30,000. That means the total will be 40,000. Okay, so we are done there. Then we do the capitals. It's 775. That's also equity. That's 775 plus 775. Okay, so we do that. T gives me 1. Okay, so we are done there. Then we move on. Okay, we are done there. We are done with all. Then we move to debtors control. That is part of our trade and receivables. So how much is that? It is debtors control. It is 288,850, right? 288,850. Okay. Then with debtors control, we know that it's people that owe you money, so we need to look at the losses. Allowance for credit losses, it's 3,006. So debtors control, we will minus 3,006, and then also normally what goes, it's trade it's allowance for settlement discount. That's the money you lose because you want people to pay you on time. It's 5,250. 5,250. So let's do the totals for that. Okay, so it will be 288, 850 minus 3,006 minus 5,250. So that gives me 280,000. Okay, so we keep going down the same level. Creditors control, these people you owe money to. So that's your current liabilities. That's your trade and other payables. So that is how much it is. Creditors control, that's 159,650. 159,650. Okay, so that's part of your creditors control. And then let's go back to our trial balance. Land and buildings, we have already done that. We have done. Depreciation, vehicles at cost, we have done that. Then bank. Okay, and then bank, it's a credit balance. Please make a note of that. It's a credit balance. That means overdraft, you owe money. So it's 15,130. So that becomes an expense. That becomes a liability. So other financial liabilities, it's 15,130. Okay, and then we keep depreciation, that is done, and then prepaid expenses, insurance. So it's prepaid, it becomes an asset, right? So it comes here, I think it's 2,700. Okay, so you see how easy we do this. We just go down our trial balances and then we are done. We need to add in equipment, plant and equipment. It's from the previous question. That's 1,790,000. So that becomes 1,790,000. Okay, now we do the totals. Our non-current asset, it's that. Okay, our current asset, we need to do to calculate the total. That is 836,600 plus 280,000 plus 2.7. That's 1,019,300. Okay, so we need to get the total. Okay, it's 1,790,000 plus 1,9,300. It's 2,090,000. Okay, it's 836,600 plus 280,000 plus 2.7. Okay, 8. Okay, I made a mistake here. This is 835. 600 plus 280,000 plus 2.7. That gives me 8,300 plus 1,790. It's 298,300. Okay, the total for the total equity. Okay, that is 1,550 plus 483 520 plus 40,000. That gives me 207. It's giving me 2,073,520. Okay, so we get both of the totals. Okay, so that's our total equity, and then we need to get total non-current liabilities, total non-current liabilities. Let's get that. It is the easy one. It's 528,000. Okay. Then the current liabilities, the total. Okay. It will be 159,650 plus 132 plus 15,130. That's 306,780. Okay, so the total cost is 528, right, plus 306,780. It gives me 834,780. That's how much I get. 834,780, and the total equity plus liabilities, right? It will be total equity plus liabilities. It will be 2073,520 plus 834,780. Okay, so it gives me 2,908,300. Okay, as you can see, they balance off nicely. Just some concluding remarks. You know, it's don't stress about trying to get these things to balance. Okay, you'll probably get 1 mark or half a mark just for the fact that they do balance. Don't stress about that. And you know, what you need to do here is just to show your workings, plug in the values at the right places, and even if they don't balance, just keep moving. Don't waste time trying to find it. It's just half a mark, you know. And I hope you have learned a lot from this. You have seen how we use the 3-step formula. That means we know the layouts, right? Second of all, we first start with the additional information. We do the calculations, right? After the calculations, we do the easy part, the easiest part. We just plug in the values into the trial balances. Okay, so I hope you guys see how easy this is, and you know, you do the most important thing. You practice, and this will become, like, you know, so easy. You will really enjoy it. Okay, good luck, guys, and yeah.